the two big assets that I look in all of this is really obviously cryptocurrency and technology stocks, because they seem to be outperforming debasement more than anything else. They're in a log trend channel, which means that basically over time, if the cycle's extended, the price goes higher. And I think people don't really understand this mechanism because of what happened in the kind of stunted cycle of 2021, that we've kind of got the opposite of 2021 at play here, which is that time is being extended and therefore price likely gets extended upwards. Just zooming in now, is we use our financial conditions index as a lead on total global liquidity. And it has been sideways for a while, but it looks like it's about to expand again because it's the dollar, interest rates, and all of those seem to be moving in the favor of that, which then gives us a longer lead on the cycles. Your best guesstimate right now of when liquidity peaks, is it Q1? A bit longer? I'm in the camp of Q2, but obviously it's probabilistic and it can change, but it's not this year. And
no, it's not this year.
That's a big important factor for markets.
Yeah, it's. I mean, in my view, it's at least 6 months away. I mean, the estimates we came up with, we use leading indicators. Those leading indicators are based on factors like what the business cycle is doing, what's happening to things like oil prices, what's happening to volatility in the bond markets. I mean, a number of things. But that actually comes up with the latest figure that I saw was March of next year. So it's pretty much, close to where you're saying.
Raoul Pal believes that cryptocurrencies are on the verge of surpassing the internet in both adoption and financial impact. He predicts that digital assets will eventually reach billions of users and could grow into one of the largest markets in the world. His bold outlook has sparked both excitement and skepticism within the crypto community. In his analysis, he compares the early growth of the internet to that of cryptocurrencies by looking at wallet adoption alongside internet address data. His conclusion is that cryptocurrencies are expanding at a faster pace than the internet did during its early years, making their trajectory even more remarkable. Paul argues that the explosive growth of digital assets will slow slightly over time but will still lead to mass global adoption, potentially encompassing a significant portion of the world's population. He believes the value of the cryptocurrency market could rise dramatically, driven mainly by two factors: the decline in traditional currency value and the powerful effects of network adoption. Together, these forces could fundamentally reshape the financial system. According to him, cryptocurrencies are growing faster than any technology we have ever seen, and even if the most ambitious adoption milestones are not reached exactly as projected, the pace of change is extraordinary. He also believes this extended cycle will push both technology stocks and major crypto coins like Bitcoin, Solana, and Ethereum to much higher levels. While some may see his prediction of massive market expansion as unrealistic, Paul maintains that if network effects continue and traditional financial systems keep weakening, such an outcome may not be far-fetched. For him, the rise of cryptocurrencies signals a transformation that could redefine how money, finance, and ownership are understood in the modern era.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
One thing we did do, and I just wanted to get your thoughts on this, gold has been an interesting market. It kind of does what it's supposed to do right now. But what we found is gold seems to be highly correlated with financial conditions, not real rates and all the other things it was linked to, but it now seems to be pretty much real-time financial conditions. So, it's been in this kind of wedge pattern recently. Let's assume that the dollar weakens a bit more from here, rates come down a bit more, that'll break out gold because that's the majority of financial conditions, which kind of leads everything we found by about 9 months. So gold has become really interesting to watch, and for me is now quite explainable. It goes from periods of being explainable to not explainable, but that pattern in gold I think is a important one. I know you look at gold as well.
The cryptocurrency market appears to be in a waiting phase before the next stage of price discovery, a development that could draw in more institutional capital and extend the typical cycle longer than usual. According to Paul, many elements of the crypto ecosystem are already in place, but patience is required as the path forward is clear yet never perfect. Using the Business Cycle Index to track global economic conditions, Paul suggests that current market behavior aligns with the idea of being in a waiting room, poised for the next move. Market analysts also note that institutional allocations to the largest cryptocurrencies remain strong despite uncertainty in interest rate policies, while stablecoin flows on major exchanges continue to rise, signaling potential new investment activity. Some leading altcoins are preparing to break out of this holding pattern, with Solana highlighted as one of the first to move, followed by others like SUI and Dogecoin, once larger assets begin to recover. At the same time, XRP is already experiencing strong momentum, while other altcoins outside the top tier may take longer to advance. Paul has compared the current cycle to past bull runs, describing the similarities as striking, though he expects this time to last longer due to broader economic conditions, including weakness in traditional currencies. Analysts argue that these trends are not just temporary boosts but signs of deeper, long-term shifts supported by fiscal pressures and rising debt. Paul believes cryptocurrencies remain highly sensitive to liquidity changes, making them powerful high-beta investments that respond quickly to capital flows across global market. He predicts the market is entering what he calls the banana zone, a phase of exponential growth driven by liquidity, shifting narratives, and the return of retail investors. In his view, this next stage could push the overall cryptocurrency market to new heights, with adoption and innovation fueling one of the most transformative periods in financial history.